Welcome to Bloomberg ETF IQ Europe. I'm Francine Lacqua, and over the next 30 minutes will be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. Making history, a Vanguard equity fund becomes the first of its kind to top $1 trillion in assets. We'll discuss the race for lower fees. Flashing red, Bank of America strategists say a plunge in cash levels is sending a sell signal for stocks. We'll ask if the rally is set to take a pause. And a smart year for ESG. Green investing tops the 2020 league table for smart beta inflows. We'll bring you this year's scorecard. Well, first up, let's take a look at which countries and sectors have been attracting the money. Our Danny Berger has all of the details. Hi, Danny.
Hi, Francine. I've got FFLO up. So these are ETFs which track European regions. And for another consecutive week, it really has been the trend all month so far, is that the UK is topping the leaderboard, $522 million worth of fund flows. Look, the net flow from Europe was 521. So basically all of that being carried by the UK. Citi mentions that for December so far, ETF inflows are already on their way to topping what we saw in the record November. They think that this inflow really is due to investors who want to get into value stocks and more commodity sensitive names. So that's certainly part of the reason why we're seeing the UK looking so popular for ETFs, despite the fact that this past week does capture last weekend when we weren't sure what the outcome of the Brexit talks would be. Now, speaking of value, we also saw net inflows into France and Germany as well over the past week. But to the downside, not all of continental Europe got inflows. Italy seeing outflows of $57 million. Most of that coming from a BTP tracking ETF. Yes, Italy might be one of the few bonds that's still giving us a positive yield. Still, that yield near a record low. So perhaps investors not all that interested in owning a BTP ETF right now. Francine?
Danny, thanks so much. Our Danny Berger there with the latest funds and flows. Now, money managers overseeing more than $500 billion in assets are underweight cash for the first time since 2013. According to a Bank of America survey, investors are the most bullish towards risk-on assets, stocks and commodities in almost 10 years. Strategists say the plunge in cash exposure is setting off the bank's sell signal for equities. Well, joining us today is Antoine Linné. He's EMEA head for SPDR ETF strategy and research at State Street Global. Antoine, always great to speak to you, so thank you so much for coming on. When you look at some of what we'll see over the next 2 to 3 months, how different will 2021 be to what we've seen so far?
I think there's a bit of a sugar rush towards the end of this year. Clearly, what was different actually between Europe and the US is that the flows into value in terms of into cyclicals, into risk-on type of trades really came late in the game, just after the vaccine announcement, really. So for all of the buckets of risk-on trades, it's been filled with in the past months or past 5 weeks now. 2021 might be a bit different. I think the expectation for returns might be lower. The good thing, though, is that bond performance is expected to be even lower than that, so that still gives a little bit of a signal to be positive risk assets, equities. There will be some pockets of value to be found. But one thing that we believe at State Street Global Advisors is that the resilience of the market and investors will be retested as we go from maybe one wave to the next, especially in the COVID, crisis.
Antoine,
or in the COVID pandemic.
What happens to the rotation? Yeah, what happens to the rotation? How much more will we see that?
I think there's some room for rotation and some room for if PMI numbers were actually more positive than expected this morning, say for France and Germany in particular. So that's to some extent a positive in the continuation of the rotation. What we've seen in the last week is a little bit of a pause. Obviously, there were a few concerns. You mentioned Brexit, and it's good to see flows back into UK equities in particular. That's a place where, as you mentioned, I don't know if we call that a pure value trade or if we call that a trying to buy what has not been or what has not caught up yet with the rest of the market. I think we'd want to be a bit more careful about the value in the sense of the factor term. But clearly, we continue to see some investors buying that. Now, for 2021, we still believe that the US and China and EM, to some extent, make sense in terms of allocation, even if maybe that might not be fully aligned with some of the European strategists in particular, who believe that there is value left in Europe, in European stocks.
Antoine, yeah, what happens to fixed income in Europe and elsewhere in 2021, and how do you play it through ETFs?
So in 2021, we keep a long bias towards carry, so going long investment grade credit. To some extent, there's not a lot of fear of a kind of big duration move in the euro space. So the curve in euro should be relatively well anchored. The ECB is in the market. Inflation remains really lackluster. So there's even if PMI numbers were good, I mean, inflation is not a signal that the strong recovery is en route. And as a result, we're positive, being long investment grade euro corporate, being long US investment grade as well. And we would want to play tactically going long high yield through ETFs, of course, because they're an easy tool to get into the market. Going long high yield when spreads widen a little bit. So on a bit of bad news, this could be an interesting strategy to play. Other places, of course, which are quite important if you're looking for yield and for a catch-up in terms of performance, it's emerging market, local currency in particular. So there still is a pickup to be had because of further dollar weakness. As a euro investor, and maybe as a sterling investor, because sterling is relatively fair valued at the moment, or even a bit expensive to some extent, you might want to hedge at least your cable or your euro-dollar exposure. I wouldn't hedge the underlying EM currencies, but I would hedge my exposure to the dollar and try to benefit from the good performance or catch up of EM currencies like the Brazilian real and the Turkish lira.
Antoine, overall, given the ETF market in Europe is so much smaller than the US, how much are you expecting it to grow because of what we've seen this year? There's been a lot of appetite for it. Does it double in the next 5 years?
I think we've put a paper back in September in terms of the growth, and I think we called it to crisis and still growing. The market in Europe, we were expecting it to maybe touch $1 trillion later in this decade. Clearly, doubling it by 2025 might not be a crazy idea, given the speed at which it's growing. Now, it is fair as well, and whether it's about fixed income or about equities, it is fair to say that the penetration of ETFs in investors' portfolio is lower than it is in the US. It is clearly still growing thanks to what we would qualify as institutional investors, rather than the more retail type of investors, because a lot of the ability for ETF issuers as well to sell through bank networks and so on is maybe more limited than it is in the US. So from that standpoint, the opening up of that part of the market will be good, but $2 trillion, should not be too difficult to get to by maybe 2025. We've got to be careful about making those forecasts, but that's in 5 years' time now.
Yeah, Antoine, when you look at some of the appetite for ESG, how much will this market grow? So if you're expecting big growth for ETF, what's the part that ESG ETFs will play in that?
That's been the. I think if I were to remember three things about 2020, it's adoption of fixed income ETFs by a broader number of investors. ESG as a key signal of a tipping point or a turning point in terms of the flows. And if you're thinking about the acceleration of the number of products that have been launched this year, 60 or more equity ESG ETFs, close to 17, or let's say close to 20 fixed income ESG ETF in total. So I do believe that this is clearly the beginning of a trend. Obviously, the numbers are staggering in terms of flows. There's been a 100% increase in fixed income ETF flows from 2019 to 2020. We might not go at 100% again in 2021, but it would just mean gathering 6 billion in fixed income ESG ETF, for example. It's not like an unsurmountable task, I would say. So this is, in our sense, a strong growth market for the overall industry, and it has an opportunity to catch up quite significantly. Just, sorry to focus on fixed income just for 1 minute, but if you're thinking about how small fixed income ESG ETF is across the globe, you've got roughly $1 trillion of assets in fixed income ESG strategies in the fund market, and the ETF is really, really small in this segment. It's got you've got 15 billion in Europe and domicile ETFs at the moment, so a lot of space to grow, in our opinion.
Antoine, thanks so much. Antoine Linné there, EMEA head for SPDR ETF strategy and research at State Street Global. Now, coming up, has a rotation into value run out of steam, or has it only just begun? We'll discuss that more and bring you your smart beta scorecard for 2020. That's coming up next, and this is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now let's take a look at which smart beta strategy have been gaining. Here's Danny Berger with your smart beta scorecard for 2020. Hi, Danny.
Hi, Francine. Look, ESG absolutely dominating the flows we've seen into smart beta so far this year. We've heard again and again people on the show come on and tell us it is a pivotal inflection point for ESG, and the flows really do back that up. Nearly 40 billion euros worth of flows going into European listed ESG funds so far this year. Previously, the record was 15 billion, and before that, we didn't see a year where flows topped even 3 billion. So the pickup in the past 3 years has been absolutely remarkable. This year, driven even further by the coronavirus crisis as well as regulation. Now, the last two there, size and value, are really indicative of what's happened in the markets over the past few months, and that's this reopening trade. Hopes that you'll get domestic stocks to outperform as the economy recovers. That's that size factor there, betting on small caps. Value, of course, the underloved fund. I should say fourth on the list, so it didn't make it into our leaderboard, is Momentum. That still did not have net outflows, though its interest did start to wane through the second half of the year as we have that reopening trade. Now, looking at those who lost, multi-factor ETFs saw the biggest outflows. So these are ETFs that take things like momentum, value, growth, stick them all underneath one wrapper. Now, perhaps the reason investors are less enthusiastic about multi-factor this year could be because we've seen this big rotation. Maybe some people want to time it. It's difficult to do, clearly, when you own every factor. Now, in terms of other outflows, we've also seen dividends, for example, not do very well this year. Low volatility, those are sort of the same sort of bond proxy play, not very popular this year, Francine.
Danny, thank you so much. Our Danny Berger there with the very latest scorecard. Now, for more on all of this, let's go to Howie Lee. He is head of ETFs at Legal & General Investment Management. Howie, happy almost end of 2020. What are you looking at in terms of rotation for the next 3 months?
Good morning, Francine. And you know what, over the next 3 months, and actually probably very much likely into 2021, it's going to continue to be about ESG again. I think really we're just starting to scratch the surface. You saw Danny's stats there about how ESG really dominated the flows. And again, the investors continue to need to allocate to that. We see investors both on the institutional side as well as in the wealth management side needing to have more ESG solutions. So I think that's where a lot of attention is going to be. But I think the other side, if we look at equity still, is there are definitely opportunities which are still undervalued. A lot of the movements this past year has really been on the large cap stocks, and some of the mid cap and small cap opportunities are often not seen with the same kind of lens. So I think there's going to be a lot more focus in the new year on that. And I think that's where a lot of times the thematic portfolios that we certainly look at, that's where we see the attention and where some good value can be found.
Howie, do you think there's anything that's being mispriced out there?
Yeah, definitely. I think that's probably pretty obvious if we talk about some of the more expensive stocks. You kind of look at historical valuations, and I think a lot of investors over the past year have had to have a bit of a reset to see what stocks are actually worth. Even though certain stocks seem to be expensive, they continue to go up. Now, that being said, one of the key metrics that I think is very important to continue to keep an eye on is sales growth. And so sometimes it's very important to look at other fundamental factors to see what's driving that. And I think 2021 is very much still the same. Got to look at how the underlying companies are performing.
When you look, Howie, at some of the news stories that are making the rounds, one is U.S. stimulus, the other one is Brexit. Whatever happens with Brexit, what does it mean for the ETF market in the UK?
Yeah, I don't think that Brexit's going to change too much in the ETF market. Most ETF providers have already gotten ready to essentially Brexit-proof themselves. So the ETFs will continue to trade on the London Stock Exchange as well as across Europe. I think where Brexit will present opportunities are very much for asset allocators to decide for themselves whether the UK market is actually of good value to invest in. And I think there will be probably quite a few people on the street that will think that that is the case. As it relates to US stimulus, again, we are in an environment where we will continue to see low rates. Again, that is why it's really important to understand the relationship between low rates and actually the valuations that we see in the equity markets as well.
Great. Howie, thank you so much. Howie Lee there from Legal & General Investment Management stays with us, and we'll talk a little bit more about all of this. Coming up, an equity fund has become the first of its kind to top $1 trillion in assets. We'll bring you more on that next, and this is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now, an equity fund has become the first of its kind to top $1 trillion in assets. The Vanguard Total Stock Market Index Fund, which includes both a mutual fund and an exchange-traded fund, passed a milestone at the end of last month. It caps a record year for Vanguard and a record year for ETF industries. Now, globally, inflows are set to reach their highest ever level, with net flows topping $460 billion. Well, still with us, Howie Lee from Legal & General Investment Management. Howie, when you look at the news from Vanguard, what does it tell you about the health of ETFs in general?
Yeah, the ETF industry is only going to continue to grow. I think we've seen that trend line continue for quite a number of years now. And as more investors are looking for both simple investment solutions, diversified building blocks, that is really just highlighting the fact that the ETF industry is going to continue to grow, not only just in the equity space, but very much in the fixed income space as well.
Where do you see the biggest growth actually coming from? How we talked a little bit about rotation, we talked a little bit about ESG, but what will fundamentally change in this space in 2021?
Yeah, so 2020, we've seen on the equity side, the largest areas of growth were both ESG as well as thematics. And I think thematic investing continues to garner a lot of attention and interest in investors as they continue to consider how to evolve their asset allocation process. Another area for development in 2021 will indeed continue to be in the fixed income space. That's an area that we've been focusing on for some time and recently launched some funds there. And 2021 is extremely important because if you look at the flows over the last 2 years, actually fixed income inflows had actually outstripped the inflows in from equities. So, there's lots of opportunities for investors to be found in fixed income. And I think more and more asset managers will very much be launching new products in the ESG fixed income space.
Howie, when you look at the active management space, certainly when it comes to ESG, how will that change the ETF space?
Yeah, so there's been this dialogue around active management and whether active management and ESG go hand in hand. But actually, it really depends on how index or I would say asset managers that run index strategies approach this. Certainly at Legal & General, we're very keen on making sure, first of all, our products are ESG aware and have ESG integrated into them, especially as new products come going forward. But also more important is the ability to essentially vote with your, with your shareholding as an index investment manager, you have the capacity to vote and make change and really promote good practices at the companies that you invest in. So, I don't think it's exclusively for the active management community. The index investment management community can also participate in that ESG kind of voting scene.
Okay, we're way too optimistic, Howie. Is there anything that actually makes you worry about the ETF space in 2021? Is it liquidity? Is it what could happen in the real economy with banks insolvency and the crossover to ETFs?
Yeah, so I always look at ETFs and mutual funds in the same way. These vehicles have been around for a long time. 2020 was probably one of the biggest tests for the ETF market as it relates to, especially on the fixed income side. We did see spreads widen, and that is, a concern for some investors. But as we had seen through April and March and May, as more investors understood why those spreads widened, it was really to recognize the underlying markets for those bonds. The spreads of those bonds have themselves widened as well. And so I think what we're going to see in 2021 is, if there are spreads widening, actually investors fully understanding why that is and recognizing that what the ETF vehicle is doing is actually giving real-time price transparency of the value of the underlying holdings.
Howie, if there's one thing that you want to be invested in ETFs in 2021, what is it?
I'm probably going to say thematic ETFs. For me, it's all about focusing on the long-term growth. And there's so much uncertainty out there, right? We've had a very difficult period in society in 2020. 2021, you asked me about Brexit earlier. What we do know is that the world is shifting. It's going down the digitalization route. We are seeing more efficiencies come from automation and healthcare innovation, and of course, e-commerce logistics. And so for us, kind of looking forward, is to identify those long-term growth opportunities. And I think going back to your question around ESG, sustainability will definitely be a key area.
Howie, thanks so much. Howie Lee there, head of ETFs at Legal & General Investment Management. Well, that's it for this week's Bloomberg ETF IQ Europe. We'll be back with more next Wednesday, 9:30 a.m. London time. And this is Bloomberg.